We have our regular market guest joining us this morning on this very important news day. Feroze Azeez, Joint CEO, Anand Rathi. Gentlemen, thank you so much for being here with us this morning. Knee-jerk reaction, Feroze, but not as much of a pain as one would have thought it is likely to be this morning. But of course, energy stocks continue to be in focus, especially given the Russian oil import and the penalties that are likely to be imposed on India. And add to that, Iranian imports also coming under Donald Trump's radar. So what are you making of the energy sector this morning?
Karthik, I think firstly on the market overall, I personally think that when it comes to a certain news is not important as much as when it comes. When the news comes, if you've already gone through 11 months of time correction and you're about 5.86% below the peak of September 24, then you've already spent 11 months of earnings growth. Last year's earnings growth of Nifty was 11%, reported only 6.5%. With Nifty, NSE reports only 6.5% because of the 4 constituents which changed. So you have got 11% earnings growth of the current 50 constituents of Nifty, 0.1. You've already gone through a 5% of price correction, 5.8%. You've already gone through 11 months of time correction. And when it comes to trade deal, any new variable, the second part of how a market reacts is if there's a new variable is when you get a knee-jerk reaction. Like when on 7th of April, when Trump said the same thing, Nifty opened almost about 1,600 points lower. That's right. Because a new variable comes. So whenever new variables come is when you get substantive reactions. And markets have already priced in the current situation. And the markets are giving a message that you tell us what the final is, then we will decide. Your bullying tactics or to and fro's of negotiations don't ideally be in the open. This is the first time a trade deal is being discussed so much in the open. So I personally think the markets are sensible and they'll know what negotiating tactics are. And that's what is happening.
All right. And specifically on the energy stocks this morning, given the fact that a new variable of penalty on Russian imports comes in, Feroze, what are you making of that?
I personally think that those, of course, like in the morning, also some sanctions on certain companies were spoken of, too, were disclosed. I think the energy sector is represented in the form in Nifty about 9.6%, and NSE 500 about 7%. So it's not a main sector, but I personally think you have to be very, very, very careful to be in this sector currently. And I think I would not get into the sector seeing it as buying opportunity because the new variables need to emerge. I think the geopolitical uncertainty on energy sector is one of the most overweighing. So I would not see that as buying opportunity, any correction. And I think oil and gas have had a very bad couple of years in terms of earnings as well, to be more specific.
All right. Well, we don't know whether Trump will chicken out or not, but we know for a fact, Feroze, that Fed Chair Jerome Powell has not chickened out and he has not cut interest rates. And now that is something which is unlikely to augur well again for India's IT sector. And this IT sector, of course, not just quarterly earnings, but for a while now has been under pressure. Is there any recovery in sight? Because investors tend to be losing money on IT stocks day after day.
I think, Karthik, there's a lot of cleansing in the ownership of IT which is happening. There is some degree of unwinding of the whole weights reduction in the passives of IT stocks.
All right.
What happens is if there's underperformance, there is lesser weightage. If there's lesser weightage, more money goes out, then there's more underperformance. That's called the vicious cycle of passive unwinding or passive winding. There's some stock which get the headwind of passive weights reducing. So IT is going through that transformatory ownership change. That's point one. That's why it is 20-25% lower. Our Nifty IT has about 10 stocks. They're lower they've done great earnings last year. They've done about 10.6% earnings. So I think that will turn around. So if you look at Nifty IT over 3-year periods, you will at least see a 4-5% compounded alpha or excess return over Nifty. That's my take. Now coming to the interest rates of the US. US interest rates being higher, to my mind, is a very good thing for sectors which are dependent on dollar depreciation. So what happens is when currency interest rates are different, interest rate parity makes sure that Indian rupee depreciates faster. Now we have had RBI reducing rates. We've brought back repo to almost 5.5 from 6.5 after 2.5 years of lull from June 22. And here the US Fed is not reducing interest rates. So the interest rate parity is favoring the currency of India, which was one of the challenges of rupee depreciation. So I think there is some give, there is some take. Of course, IT as a sector has a weight of about 11.2 in Nifty. So it's a heavyweight sector, more than 10% weight. So what I personally think I would be a contrarian on the IT sector from a 2-3 year perspective on an alpha or excess return basis.
All right. Well, let's leave it at gang. Feroze, Azeez, always a pleasure having you with us here on News 9. Thank you for all your inputs.